I received an interesting question after I posted my last video. What influences me or motivates me when buying a stock? What influences and motivates me has changed over the last few years. Initially, I wasn't buying stocks for dividends. It was mainly for companies I've heard of or had an exciting story. In 2020, I kept on hearing about Tesla constantly all the time. I knew about the cars and I knew the EVs were going to be the future, but Tesla had a big buzz about it, all down to the CEO, Elon Musk. At this time, I was watching Tesla Daily, solving the money problem, and anything on Tesla really that I could find on YouTube, as well as reading articles. I'd seen how much the stock had gone up, and I guess it was a case of fear of missing out. I started buying and then invested into it when I had any free money. I didn't buy at the top, but my average is $207 post-split. The stock has been as high as $400, and it's been volatile since then. I've been in the red and green so many times. Another stock that had just gone public was Palantir. Bought a few shares and then it dropped quite a bit. Never buy when the company IPOs, or in Palantir's case, direct public offering. The majority of cases, the stock price drops. I'd held all the way through the drop. It went as low as sub $7. I should have bought here. I still believed in the company. The fundamentals had not changed. Oh well, you live and learn. I have bought occasionally, bringing down my average to $25. Now in the high 30s, I'm well in the green. Over time, I realised I'm putting all my eggs into one basket here. My portfolio was 95% Tesla. I really needed to diversify. I had a few shares in Coca-Cola and really liked the quarterly dividend. I'd seen people posting that they were living off dividends, or at least it was contributing to the standard of living. So that's when I set out to replace some of my work income with dividends. Initially, I was buying customers I was already a customer with. I've had Apple for years. iMac, laptop, iPhone, watch. I'm fully invested into the ecosystem and did not feel the need to leave it. I started buying Apple, although the dividend was small. Starbucks is another obvious one, who hasn't been there. Followed by Johnson & Johnson, Procter & Gamble. I have a lot of their products in the house, plus they're quality dividend payers. I then started to look at ex-dividend dates, trying to figure out which companies to buy in order to get paid every month. I did not do enough initial research and bought companies I wouldn't have done without that initial research. One of these being Intel. It was down from a high of $64 and it dropped to the mid $40 range. I thought I was getting it at a bargain price. I didn't really look into the situation at Intel. It had been paying a dividend for years and regularly increasing it. I thought it would always be like that and the stock price would recover and eventually go higher. Luckily, I didn't pile loads of money into it. I wasn't even a big fan of Intel and was more focused on the quarterly dividend that would help bring more income for those particular months. I've rebalanced my portfolio since then and exited some of those positions. As you spend more time investing, you start to look at the metrics, past performance, future guidance, the compound annual growth rate, the balance sheets, liabilities, revenue and cash flow. With these metrics, you can tell if the dividend is going to be safe and if they can continue to raise the dividend in the future. I also check the intrinsic value, mainly for new stock investments. Intrinsic value is a way of describing the perceived or true value of an asset. This is not always identical to the current market price, because assets can be over or undervalued. There are a few methods used, including discounted cash flow, trading multiples, the Peter Lynch fair value, and the dividend discounting model. I use the value investing website, which breaks down the calculations for each method and gives a fair value. I then take these fair values along with the analyst's 12-month price target to gauge whether the stock price is undervalued or not. We now have information at our fingertips with plenty of resources. I use TipRank's MarketBeat, Seeking Alpha finance charts, Motley Fool, plus the news resources in my Trading 212 brokerage account for my stock citer. With this information, it has completely changed my outlook. Instead of concentrating on how much income I can bring in, I've been looking at the overall growth, price appreciation plus dividends. Before I was mainly buying individual stocks, and now I'm trying to increase my percentage in my portfolio with ETFs. At the moment it's around 20%, but I'd really like to get it closer to 70%. A long way to go, but the target to aim for. I'm still buying individual stocks, but less trigger happy with the buy button. As usual, thanks for watching, and I'll see you for the next one.